Hi, and welcome to the Stockscores Market Minutes for September 5th, 2014. This week I want to talk about the hazards of trying too hard. You know, a trader motivated to take a trade by anything other than the analysis that he or she has done will take marginal or bad trades. There's all kinds of things that can influence our decision making, our need to make money, our pride, our ego, sometimes even boredom or peer pressure are reasons that people will take a trade, perhaps unknowingly, thinking that they're doing the right analysis, when in fact all they're trying to do is force the trade to happen. What we have to do is keep it simple, to plan our trade and then trade the plan. Now, there are times when the market is not in a giving mood, and at those times, you want to be lazy. When the market is trending and when there are lots of opportunities, those are the times to work hard and try your best. Ultimately, if you want to beat the market, you have to stick to the analysis and not to these external factors that can force you to make marginal trades. All right, let's get into this week's analysis. The S&P 500, and I'm showing this week a daily chart. In the past many weeks, I've been showing weekly charts, but that's been getting kind of boring because over and over we're saying, well, the long-term upward trend is up. So this week I'm going to look at some daily charts, and here you can see that the market is in a relatively narrow upward sloping channel. Now, it dropped out of that channel at the start of August when it corrected, largely because of simply some profit taking and certainly things that were going on in the Ukraine with Russia had the world a little bit worried. Well, those problems kind of went away. Maybe they didn't go away, but people certainly got bored of the problem and stopped paying a lot of attention to it, and the market went back into that upward sloping channel that you see on screen. So right now we're sort of in the middle to the upper range of that channel. We started to test the lower envelope at the end of last week, but came back by the end of the day. And so my expectation is that we continue to slowly trend higher. Now, if that green line is broken, then we'll go into another corrective phase, and maybe it'll be something that happens around September 11th. Perhaps there's some sort of terrible terrorist act that causes the investment community to get scared. Who knows what the real catalyst will be? Maybe it's a comment from the Fed saying, well, maybe we need to raise interest rates sooner than later. Those sorts of things can cause these corrections, but as it stands right now, we're in that nice, relatively low volatility upward sloping trend for the SPY. TSX, somewhat similar, but more volatility. Here you can see that we're in that upward sloping trend line, and we've really run away from the trend line and therefore maybe due for a little bit of a pullback. When I look at charts this week, I looked at a lot of the real strong TSX listed companies, and I see parabolic trends which are dangerous in the banks, in the rails, and in the pipelines. And if those, if we get a little bit of a correction in the market, you could see those real hot sectors see some profit taking, and that could take these big indexes down. So be a little bit cautious. Certainly don't sell the pipelines, don't sell the rails or the banks today, because today they look great. But tomorrow it would be very easy for them to start a correction because those trends have gone parabolic. TSX Venture had a bad week this week. We can see a pullback to the upward trend line in this pennant pattern. Now keep in mind, in the long-term big picture that we talk about most weeks here on the 3-year weekly chart, this is really in a turnaround situation, but we haven't broken out of this pattern, and until we do, I don't want to get too excited about owning the TSX Venture. It has promise, and I think as we go into what is traditionally the strong season of the market, which tends to start October, November, we could see this group start to make a resurgence as retail investors take an interest in these stocks, many of which are really undervalued. The Treasury bond market had a big pullback this week. That means interest rates went up. But you can see within the confines of the upward sloping channel, we're still inside that. So we haven't broken down. The bullishness in treasuries is still intact. We know that because the bottom envelope of the channel, which I've drawn here in green, has not been violated. So what probably happens is we have another down day or two, get down to that bottom envelope, and then see a bounce back and a resumption of that longer term upward trend in treasuries. US dollar has really been the story. It's made one of the most significant gains over a relatively short time period in history over the last few weeks. and that's largely because of weakness in Europe. So people are dumping the euro and buying the US dollar. US economy is getting better, so all of these things point to people wanting to own the US dollar, and you can really see the parabolic upward move in the US dollar over the last month or so. I think that it's getting a little overextended, and therefore we're due for a bit of a pullback, but no signs of a pullback. It could continue to go up for another 2 or 3 weeks before we get a pullback. Just you want to be very wary of the fact that anytime trends go parabolic like this one has, there's a good chance of that pullback. Now, the strength in the US dollar hurts commodity prices, and you can see that gold has been sliding lower while the US dollar has been rising. The same can be said for oil, which we'll look at in a moment. So we're now at the bottom upward trend line on gold, which is really a very long-term trend line, and it should hold here. But we want to be cautious, and certainly don't get too excited about the gold stocks right now, because of that strength in the US dollar is hurting the commodity price. Here's the chart of oil. It is nearly back to that longer term upward trend line, and therefore it should bounce soon. I think with the trend in the US dollar parabolic, we should see a bit of a correction in the US dollar, and that should give support to the gold and oil markets. The operative word here is should. Until it starts to show the signs that it is, don't get too excited about it. And finally, the chart of the VXX, which is our old fear index, is really hovering around support. It tried to make a little bit of a jump up on Friday, and the market ultimately turned around, and the VIX went lower as it went into the close. So really no action here, no sign of fear in the stock market just yet. So bullish on US stocks, bullish on Canadian stocks. I would say the Canadian market a little bit more due for a pullback, particularly in the banks and rails and pipeline stocks. Those are the areas which have really gotten a little bit overextended in my mind. Gold, I'm still neutral. It's right at support. It should hold that support line, but it's going to need some help from the US dollar, and the same can be said for oil. There's really no signs of weakness in stocks just yet now, but trading action last week showed that the buyers really lacked motivation. There wasn't a lot of excitement, a lot of buyer interest. This could bring some corrective action as we move into September. We don't see any signs of it yet, but you do want to be watchful of that. The US dollar strength is hurting gold and oil, but there should be a pullback in the greenback soon, and that should help those commodities. Fear among investors is minimal right now. Well, that has been the Stockscores Market Minutes for, September 5th, 2014. Have a great week in the market and trade well.